All right. Good afternoon, everyone. It is 12 o'clock. My name is Dan Sugg. I am the Chief Mortgage Lending Officer for Michigan First Credit Union, and we are super pleased to bring you this month's edition of our virtual homebuyer seminar. Every month we feature a different topic focused around the home buying process, from first-time homebuyers all the way up to downsizing and all different kinds of things. So today we are excited to do that. So a few housekeeping items first. All attendees will be muted, so please, if you somehow get off a mute, remute yourself so there's no distractions. We are utilizing the chat box, and keep in mind that we are recording this call today, so anything you type in the chat box will get recorded, and if we don't for some reason get to your direct question before the end of the call, which we hope we do, then we will make sure somebody follows up with you immediately after the call. And at the end of this call, we'll have all the contact information for both Michigan First Mortgage, Michigan First Credit Union, and our host and guest today. So with that, if I could get the agenda up, please, Zoreen. All right, so today I've introduced myself. Again, my name is Dan Sugg. I'm here at Evergreen. I sit right off the lobby of the main branch here, along with the rest of the mortgage operations department. And our speakers today, we'll introduce in a minute. Once we do that, we're gonna jump into our types of mortgages around how it is and what differences they are and what they mean to both the buyer and seller and what differences they make in the home buying process. And for the bulk of our call, we're gonna cover that for about 17 or 18 minutes. We're gonna talk all around everything related to the different types of mortgages that are out there today. And then we'll cover tips and tricks at the end, which is the last few minutes. And that's really what both our guest and our loan officer team member today will tell you is the most important thing to remember in the home buying process. And then we'll hopefully have some closing remarks and Q&A. So let's get right into the introductions. We're welcoming back, I think now three-time participant on the home buying seminar. Al has been in the mortgage business for over 30 years. And I want to give, you can certainly read what he's done there, but I want to get Al a real spotlight here. Al's done a really good job with our membership since joining Michigan First a couple years ago. And Al, tell us a little bit about yourself, what you bring to Michigan First and our Michigan First membership, and really to anybody that wants to get a mortgage through Michigan First Mortgage.
Thanks, Dan. I think one of the biggest things for me is that I really like the face-to-face interaction. It's been a really cool part about being part of this family was having the ability to be face-to-face with members that truly want that. And a lot of our membership does for that. And I love it. And so I think that having the background, having the experience, having the scenarios of life, I guess, have really helped me to be able to share my stories and share the things that I bring to the table to make, I think, the process a lot easier and a lot, I guess, feel a lot more comfortable and confident in what they're doing.
Yeah, and I do thank you, Al, for participating in this. I know you're busy, but this is super important for us because you do speak from a point of experience, and you have very experienced partners in Dominic, which is our next guest, if you want to bring that up. All right, Mark Romano has been the broker owner. He's with Realty Executives Hometown Dream House team. But does that all fit on a card, Mark? Holy moly. And he certainly has been licensed as a real estate agent since 1986. It looks like he spent most of his time here in Michigan. He also has been on our little webinar before. So Mark, tell us a little bit about yourself and what you'd like to share with our team today.
I got a lot right from what Al said. Thank you for having me again. Family really is what it's all about. I like to treat people the same way that I like to be treated, which is like family. And the best example of that is I just closed on a home for a family that I met when my daughter was 16 years old. We came through some issues, been showing them houses for about the last 4 years. We finally got them closed on their house, and I stuck with them all the way throughout it and got them to where they needed to be. That's kind of what I pride myself in, is actually listening to people, helping them, and getting them to where they want to be.
Yeah, Mark, and your mic is just a little bit crackly. It's not too bad, but I don't know if you can get a little bit closer to it. Maybe that might help a little bit when we talk. So, all right. So let's jump right into today's topic. You know, boy, I've been in the mortgage game like Al for almost 30 years now. And you know, it seems like about 75% of what we do is a 30-year conventional fixed rate mortgage. Over the years, we've had niche products pop up and different things happen, but certainly there's a bunch of different types of mortgage products out there. And I think for the most part, people don't explore that enough and how it really lines up with what they want to do. And that's why you need to partner with somebody like Al and Mark and understand the nuances of those and see how they may benefit you. So I would like to back up a little bit and start right off the top. And I did give Mark a little prep on this, but I'd like to hear what's going on with the market. You know, we're now 7 months into this home buying season for 2022, and we've seen a complete turnaround from the financial aspect of it. You know, we went from rates in the 3.5 range when we started the year to all the way up to 6 or 6.5 now. We're back a little bit in the low 6s or high 5s right now. But what do you think has done to the real estate market here very quickly?
Well, you know, if you really look at history and what rates have been over the past 10, 15 years, the rates really are not that bad. This market flip has given an opportunity to a lot of buyers that have been able to compete well against other offers. We're not seeing as many homes sell with competing offers. There are a few, but prices are starting to even out. We had a couple of price reductions in my listings just this past month, which I haven't done in almost 3 years. Nearly every listing that I had sold for over list pricing had to compete. Now we're seeing some FHA offers get accepted, some VA offers get accepted, some MSHDA offers getting accepted. We're seeing an increase in the number of listings out there, and we're seeing a decrease in the number of showings. So I think that all this is a good harbinger for any buyers that are considering going out and looking for something new. We have about, and just as a small snapshot, Macomb Township, which is a community in Macomb County just north of Hall Road, about 32,000 homes in it. Currently 183 active listings. Back in May, it was actually 56. So there's a giant difference in the number of listings that are available. And we're seeing more and more come on the market today. We're going to see more tomorrow.
Yeah, there certainly has. I've seen that in the market that I live in, Western Wayne County. You know, we've seen almost 4 times as many. So what is a healthy number? You know what a healthy number is for Macomb Township? What is that 4 or 5 month supply of homes for sale? Do you know?
Yeah, that's actually right now for under 200,000. There's 1 home available. You're looking up to 300,000. There are 8 homes available. Up to 400,000. There are 36 homes available, and between 400,000 and 500,000, there are 71 homes available. I think, again, in a snapshot, looking at Macomb Township, you're looking between $300,000 and $500,000 is what you're going to need to spend in order to get into that market.
Yeah. Yeah. And that's both at a national level and a state level, I've been involved in conversations around affordable housing, that housing stock from 150 to 300 that most people working class people can afford and get in that starter home is the area that, based on your statistics, at least in Macomb Township, really isn't available today, and filling that need and looking forward. So thanks for that update. So you do see the market flipping a little bit, definitely becoming more even between buyer and seller, and hopefully that will start to normalize out our market a little bit. It is normal to have your house take 3 or 4 weeks to sell, not 3 or 4 hours like we've seen in the last 6 or 8 months, which has been just nutty. So, all right, well, thanks for that update, Mark. I appreciate that. Let's just jump right into our topic now. So, Al, we're going to start with you. Real general question: what types of loans are there, and can you cover maybe some basic qualifying parameters for each of them?
Absolutely. Thank you. I think that when I look at talking to a member, a customer, whichever we want to view it, what I'm looking at in that first initial conversation is, what is it you're looking for? And what I've come to understand is that people hear numbers. They hear 200,000 and 300,000, but they really have no relationship as to what that means for them personally. And so in my first questions I'm asking somebody is, what are they looking for as far as a loan size? And then my next question is, what's the payment they want? Because those two things, and many times there's no relationship. I want a $300,000 house, but I want $1,000 payment. And so I know there's some issues with that. My next question is going to be how much money they have to work with. And then lastly, if they have any idea what their credit scores are. And those are the kind of the beginnings of kind of setting the foundation for the scenario of what they have. You can't ask the question, do you have good credit, bad credit? Because everybody's interpretation is dramatically different on what good and bad is. So what I'm really looking at is that from my standpoint, is that I'm looking for at least a 620 credit score. 620 opens the door for the stuff that we do within the credit union, as well as FHA. If somebody's looking for MSHDA, it's a 640 threshold, and then typically for conventional 680. So those are the three things that I'm looking for. If somebody says, well, they don't have a good credit score, then the turning point programs that we have within the credit union are going to be the next direction I'm gonna take them into. But those original questions really allow me that opportunity to be able to, instead of saying here's 50 different things that we offer based on the scenario that you've given me, then it allows me to kind of lead them down that direction and to say, hey, how much money you have to work with? Well, I have no money. Well, that is going to take me to a different direction. So that's what that original conversation originally does. That really makes, to me, it makes this thing a lot easier for people to understand, because they really, in most situations, they truly don't know what they're looking at.
Yeah, we're so conditioned as consumers to find out, get the best rate, when in reality, you want the lowest payment. You want the most affordable payment that can put you into that product. And that's not always about rate. In fact, a lot of times it's driven by MI factors, which is mortgage insurance, or by your tax base where you live, or other house insurance, all of those things to drive that. That's very astute. So payment, not rate. I like that, and not so much program even. And then down payment money. So credit is a driver of everything we do in your life, most certainly. So getting that credit score, understand what that means, FICO credit score for mortgage, and then working on getting that repaired. We haven't met anybody yet that we can't help them in achieving a higher credit score, but
Correct.
There's work to be done. So
Absolutely.
Awesome. All right, well, back to Mark. Mark, so we just talked about different kinds of mortgages. What types of mortgages are more appealing to a seller, and does that change, and why?
Absolutely changes. Prior to this what I call small downturn, if you had an FHA or a VA mortgage you were trying to buy a house with, you truly could not. You had about a 5% chance. Now, with things changing, we're seeing a lot of FHA and VA offers, even with the MSHDA rider on it, getting accepted. We were talking about Macomb Township a little bit earlier. In Macomb County, there are 90 homes available under $100,000 for those first-time buyers. 41 of those are 3-bedroom. In $100,000 and $200,000 in Macomb County, there's 379 homes. So there's lots out there to shop for. In a perfect world, the seller would absolutely prefer to take a conventional offer. The conventional people aren't out there in as big of a group as they were before. So the FHAs and VAs have a much better chance. If you have a good agent that's showing you houses, it's very easy to talk a seller into the advantages of taking an FHA and VA offer. It's a very easy sell for somebody that has the experience of using those types of mortgages. So I don't think it hurts anybody in this market right now.
Yeah, and it's all about perception, really. Those of us that are in the industry know that while FHA is a different type of loan and a different type of buyer in the scenario, the health and safety issues and inspections of 1970 or 1980 or even 1990 are different today. They're a little bit more lenient. Yeah, if your driveway is really cracked, or if you have peeling paint, or if there's general disrepair, you're going to have to be addressed in an FHA transaction. But ultimately, FHAs are fully documented deals that rarely go wrong if the loan officer's done their job. So, all right, thank you, Mark, on that. So Al, back to you. What type of properties are acceptable? I know we talked about different type of loan programs, but what do we normally see in that acceptable property range?
Well, within the credit union and what we offer, we lend on primarily residential homes, and we do condominiums. There's some different nuances with condos, but it's primarily homes. Single family dwellings are our main focus. We do some stuff with investment properties. And so we have that ability to lend on that type of program. But for the most part, it's been single family dwellings that are going to be owner occupied is really where our sweet spot is. I know as we're growing, we're looking more into getting into the rural stuff and also the construction. Those are all things that are happening. But that's kind of in the works right now. And it's a way of us growing as an institution.
Yeah, we did announce earlier this summer, actually in May, late May, we announced a construction to permanent loan. So as a way to maybe subsequent an area that didn't have a house you were looking to buy, that didn't have something you liked, you certainly could go the route of building a home. And we have those building loans here to help. So thank you for bringing that up. All right, so Mark, I know we had a comment on your microphone. I don't know if you're trying to get a little bit closer to it there. It is just a little breaking up, but we can hear you mostly. How do you make a strong offer? I know that's probably changed too, given everything that's happened in the housing market the last couple of months. So how do you make a strong offer for a buyer?
Well, there are so many variables when it comes to making a strong offer. Again, prior to this downturn, if you didn't have cash, if you weren't willing to make an offer where you would be willing to come to the table with anything that the house didn't price for, you really didn't have a chance to get an offer through. It would be 10 to 20% over list price. That's all changed. Now there's a big difference. If you're a strong agent that knows how to sell what you're trying to offer, you have a much better chance, number one. Number two, if you're dealing with an FHA or VA and you know what the FHA and VA are looking for, there's things that you can share with the seller to tell them to get prepared before the appraisal is actually done. It really puts them at ease where, like you said, back in the day, people were very scared of FHA VA offers because they required so many repairs to be done. But it changed all for the positive. And those of us that have done tons and tons of FHAs and VAs know to share with the seller to make sure they know how to get prepared beforehand. So there's lots of things we can do as a buyer's agent to provide the seller's needs. I hope that answers your question.
Yeah, it does. And you said something there that was interesting to me, and we've covered that topic a little bit earlier on one of our webinars, but the strength of the person presenting your offer and the manner in which the offer is presented matters. Can you break that down a little bit for us? Like what sets you apart from making an offer that maybe some other part-time agent is making an offer?
I think it really comes down to more than anything else, experience. We know what a seller wants to hear. Most sellers have some kind of experience or a family member that had an experience with FHA or VA in the past. The thing that's ever shared as far as experiences goes are negatives. So to assuage their concerns on those negativities of an FHA and VA offer is really what you need to do when you're presenting an FHA or VA offer. And how strong the mortgage rep is. I've been dealing with Al Crawford for over 25 years with mortgages. I know that he knows what to do to get an FHA and VA offer through. I know he's done all of his homework. He's crossed all of his T's and dotted all of his I's. I know what the FHA appraisers and the VA appraisers are looking for before they even go out to the house. Sometimes sellers are concerned about the timing too. It can take an extra week, but if we can prepare the seller for everything they need to do before the appraiser gets there, we can right back to that 30 to 35 day closing range.
Right. Yeah. Yeah. I think I just looked at our numbers yesterday. We're pretty much all purchase business today, and we're averaging just under 30 days for closing. Appraisals have stretched out a little bit, which is pretty interesting. That's more to do with everything else that we're seeing going on in the world with work shortages and all those other things. But all right, Al, back to you. I don't want to forget you're sitting out there for us. So
No worries.
How do we calculate that interest rate and the APR for each of the programs? What goes into all that?
So what we're looking at is when we have the APR versus the interest rate, first is that we have an automated pricing engine that we use. It actually looks at the variables. It says, this is the amount down we're working with. This is the credit score. These are the reserves. This is the scenario. And then there's a system that we use that actually pulls pricing. So it isn't something we make it up. It's a system that's done from a corporate level that allows us to give the best pricing. And it's a way that there has to be no concern about any kind of shenanigans because it's right there. It's there in black and white, and it allows us to share that. And also with our pricing engine, it allows us to check different types of programs. So I can look at a 15-year, a 30-year, a 20-year, an adjustable, all those different variables, and I can present all those to my member at the same time. And then ultimately, as far as APR goes, there's just a slight difference because we do charge a $945 fee. And because our fees are typically dramatically less than most everybody else, I think it has the most minimal effect on APR.
Yeah, APR is one that, certainly is meant to protect the consumer, and it's probably the least understood one. The new LE today does a pretty good job of breaking down the fees, and you can compare line items. But being a credit union, one of our prideful things that we do here for our members is keep the costs low and the rate very competitive for our members, and that's one of the values that we bring back. Somebody's asking, what's the $940 fee for? That's our lender fee. That's what we do to cover the back office to do the loan, the cost of providing the loan. And generally speaking, I very unofficially, that runs always in the $1,200 to $1,300 range through the industry, even higher at some lenders. So, thank you, Latasha, for the question. All right, Al, can you also cover what is PITI and PITIA?
Sure. So when we're talking about somebody's mortgage payment, people will just think, what's my mortgage payment? But there's a few different levels that are included in that. If you're putting less than 20% down, you're also going to be required to pay your taxes and your insurance. So when we're going to collect an amount up front at closing so that we've established what's called your escrows. So that's to make sure that when your taxes and your insurance come due, there's enough money in the kitty to pay those. And then ultimately, if there's an association fee. So if you belong to a condo, you also have association dues. And so that's another thing that can kind of play into the mix. So you're going to have your principal and interest, which is your mortgage payment, your property taxes, your homeowner's insurance, and then ultimately, if you're in a condo, an association fee. That association fee, though, is not included in your mortgage payment. We have to qualify you for it, and we have to make sure that it fits. But ultimately, the association fee is your responsibility. We don't make it part of the actual mortgage payment.
Yeah. And we had just a couple quick questions I can check off here. So do we do mortgages without an escrow? Yeah, it is an option at 20% down payment or 80% loan to value or less. We can exclude escrows. And we do mortgages in other states for members. If you're currently a member or can become a member, there is about 7 or 8 states that we don't do, and certainly reach out to Al and he can go over that list for you. All right, back to Mark. I want to make sure I cover a couple of things off our list today. So talk to me, Mark, about the importance of a pre-approval letter, a mortgage pre-approval letter. We know many people go to the web to start their mortgage and home ownership dream. Sometimes they get the cart in front of the horse. So how important is a solid, financially based, issued mortgage pre-approval letter?
It is probably the most important thing you can possibly do before you even start shopping. An idea of what it's going to cost you, what your comfortable payment's going to be, like Al said, to work it backward. And without that pre-approval, if you find a house you like, you're more than likely going to lose out on it without a very good pre-approval. As a listing agent, I call every pre-approval I have to touch base with the mortgage rep to try to get a better idea of, have they gotten the financials in? Have they pulled credit? Pre-approvals out there, I'm not going to mention any company names, but there's lots of them out there that they ask a couple of questions to a purchaser, the purchaser answers those questions, and a pre-approval is generated and sent out to an agent. I've seen 30-40% of those fall apart. They had no idea. Maybe the purchaser wasn't telling a complete truth, or maybe there was things that they could have found out on the credit report getting involved in an offer that they could have taken care of to make that go through. So it's imperative to have not only a pre-approval, but a real pre-approval where they've done the background. And all I can speak of is my experience with Al. Anytime I've ever gotten a pre-approval from Al, it was gospel. That's all there is to it.
Yeah, I'm watching them for you, Mark. We're making sure it's
Yeah.
done right. So, So Al, talk to us a little bit. We got about a minute left here. Talk to me about what you asked for in a pre-approval and how that process works. We had a question earlier in the chat box about how long does it take to get a pre-approval. What's your take on that, and what all is involved in that?
Well, it's really based upon the scenario, and I know we don't have a lot of time, but if it's a normal wage earner, it's the last 2 years W-2s. I need 2 years of residency. I need 2 years of employment. And I need the W-2s to back that up. The two most recent pay stubs. And then the missing piece for many is the amount of money they have in the bank. And so we're asking for the last 2 months bank statements. If it's internally, it's here with the credit union, we can verify that internally. But if it's outside, it has to be outside. And the most important piece is making sure that those monies have been in your account for at least 60 days. Many times I'll come across people that'll say, I got 40, 50,000, but it's not in the bank. So it's about getting that money in the bank and what we call seasoning it for at least 60 days. And then driver's license. Those are the basic things that I'm looking for, and that I'm never going to issue a pre-approval unless I've verified the funds, because that is always the thing that people are lacking.
Yeah. At the end of the day, we're saying we're letting our loan officer run an automated underwriting engine and say that these things are true to the best of our knowledge. And we have to have that, just not what we said, but what we've seen and documented.
Right.
And keep in mind, if that pre-approval lasts 120 days from the time you issue the credit, and then you'll have to update the appraisal with the new credit report. But ultimately, that letter is out there and good for you to use for a period of time and can be adjusted based on your scenario. And Al can walk you through all of that stuff. So, man, we did it again. We're right at time, so I don't want to miss the tips and tricks from you guys. So, Zareen, if I could pull those back up again. All right, so we'll let Al kick off and we'll let Mark close today. So Al, tell me those three things. Go through these 3 points you said that is super important for our members to take away from today.
You have to understand the pre-approval letter is everything to both me and as well as your realtor. The more information we can have and the clearer we are in understanding. One thing that I will do is that I will issue a pre-approval based upon the amount that you've asked for. And I will also let you know if you have more room. So if you qualify for more, I'll let you know what the top end is, so you have that ability. If there's a big change in interest rates, we need to adjust those pre-approvals. So that's really important. Different programs for different needs situations. With the Turning Point loans that we have, it really allows for us to fill the needs for people who think they can't qualify anywhere else. There's a lot of different scenarios. There's a lot of loans that I've been able to close that I never thought would be possible. And we've been really blessed to help some amazing people, get into that home of their dreams. And ultimately it is a great time to buy. As you heard, Mark, the inventory is getting better, the best it's been in a while. And it's forget interest rate. That's the key, I guess, everything. Forget interest rate. It's about payment. Know what payment you can afford. Find out what mortgage that meets that. If it fits into the things you're looking for, then move forward.
Yeah, I equate it, at least I did for my kids when they were going in. I said, think about like buying a car. Nobody goes in and says, what's the rate on the car loan? They say,
Right.
What's my payment? Because I can afford $300 a month or $350 a month. At the end of the day, that's what you should be going after. Certainly rate is important in the overall scope, but payment is what you want to focus on. And you're right, Al, it still is a great time to buy. I can remember in my short career, rates have gotten as high as 9 or 9.5%. And ultimately, there were still homes being bought and sold. And I remember stories back up to 18%. God forbid we ever get there again. But again, people still bought and sold homes at that point. So, Mark, tell me, what are your 3 tips that go away?
Well, no, your realtor really does know the requirements of the program they're trying to present an offer on. The worst thing that can happen is you make an offer on a home with an agent that doesn't know about an FHA or VA requirement. Find out 3 weeks later that the appraiser is looking for repairs across the board. You spent money on your appraisal. You spent money on your home inspection. You lost out on 3 weeks of market time if the seller's not willing to do those repairs. The agent knows what to look for. He knows whether that house will go FHA or VA, or I shouldn't say will go, will have a good chance to go FHA or VA, or maybe it won't. Just because it's listed online as FHA VA available doesn't mean that house is going to be anywhere near FHA shape in order to sell it. there's different ways you can structure offers. Really, the doing exactly what other homes are selling for in the same market to find out how to best compete. There's little things you can do on purchase agreements to make your offer better than others that might not cost you any money. Sometimes you can give a seller 2 weeks free occupancy, which may cost you $400 or $500, but if it's going to make your offer go through, I think that's a good $400 or $500 to spend. Again, the most important thing is having a mortgage rep behind you that knows what they're doing as far as that pre-approval goes, that will actually call a listing agent to say, hey, I pre-approved those people. I've done X, Y, and Z. I've pulled the credit, all their income verifications, and I know this is going to close if you accept this offer. That's very important, and that's something that Al does for me all the time.
Yeah, we're working together for the success of our members is important, and those partnerships matter. They do. So, well, guys, thanks. We came to the end already. I do want to address this. We do have a couple of questions in the chat we didn't get to. So I'm about to give the information that how you can get answers today or very soon. So if you have questions about technical issues or anything related to how to log on or register for the actual webinar, it's info@Michigan First Mortgage. If you want to apply for a loan, I'll reach right to the bottom and say you can reach out to Al at his number there, or at Al Crawford at MichiganFirstMortgage.com. If you go to the mortgage page here at the credit union, you will see a mortgage tab with loan officers and Al's information there, along with the 40 other loan officers that we have in our organization. And any time of the day, 24 hours a day, 7 days a week, 365 days a year, you can call our call center here at 800-664-3828 and choose mortgage, or just say mortgage into that, and you will get to somebody that can talk to you about mortgage. And for Mark, very simple. Call 586-292-6765 or email him directly at dmromano@mirealsource.com. So again, thank you, gentlemen, for joining today. I really appreciate it. You've done a great job. And thank you all for joining our webinar. And for all, have a great weekend. Thank you.
Thank you all.
Thank you. And yes, I do Macomb, Oakland, and St. Clair.
All right. Thanks, Mark. Hey, take care.